Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Wargent Property Buyers, and I'm here with Chris Bates from mortgage specialists, the Alcove. Chris, g'day, how's your week been?
It's doing all right, Pete. We're having to do a late night recording, which I don't think we've ever done, to be honest. I was trying to get out of taking the family camping, but the wife and kids won, and so we're having to go camping tomorrow. And so I had to squeeze this in late on Tuesday night. But what's news with you, Pete? You been well?
I have been well. Yes, it's a late night recording for you. It's actually morning for me because I'm in Europe for another week or two before heading back to Sunshine Coast. So I've got my morning coffee here. No rum and coke, sadly. So it's been a sort of I suppose it's almost like a first week back for a lot of people, isn't it? We've been pumped with inquiries, but I think that quite often happens in the first week of the year when people have been sitting around doing their Christmas stuff and the new year, and then they get back into work and it's like, right, property plans for 2025. And we've had a burst of inquiries this week. That's been keeping our guys busy on the phones. How about you? Is it early in the year for getting inquiries about mortgages and so on?
Oh, yeah, absolutely. I mean, there's all our team are sort of back on deck this week, and they always have a big Monday, and chatted to them again this morning. And I was interesting. I was chatting about sentiment. I always, like to know how people are feeling and thinking. There is a little bit of a positive sentiment that rate cuts are coming, and but there's always this sort of buyers a little bit of extra energy in January, and we find that inquiry is usually quite a bigger month because people are wanting to get ready and they've thought about it over the break. So, but I'm not too sure how much steam's in the market and how big the buyer pool is. I think it's a little bit too early to tell. But I do think that, which we'll talk about a bit today, right? So now just checking the ASX tracker today, 73% chance of a rate cut next month. So it's quite high, right? And so if that happens, I do think that would be a bit of a circuit breaker, and, people will be more confident. Whether they're as confident on the medium term, I would say it's probably done a bit of a flip at the moment. And, there's not lots of articles out there that, 1% of rate cuts are coming in the next 12 months. So I wouldn't say there's FOMO there, but I do feel like just when that first rate increase happened, the first rate cut's also going to have a bit of a spike to demand.
Well, yeah. So we're recording this on Tuesday, and I think I suppose the inflation genie is largely back in the box, and that's not so much a barrier now to monetary easing. The bigger question is what's going to happen to the labour market, because over and over and over again, it's surprising how the labour market has just been so tight in Australia. And by the time this goes to where there'll be the next round of labour force figures released, I think in the preceding month, the unemployment rate was 3.93%, so rounding down to under 4. So in the normal scheme of things, you wouldn't even be talking about monetary policy easing when you've got an unemployment rate at such a low level. But the economy has been pretty sluggish for at least 6 months now, and that's the other side of the equation. So, by the time this goes to air, I guess we'll have another round of jobs figures to digest, and that's what the Reserve Bank will be focusing on. So, so other stuff here. Well, hopefully you caught up with the football highlights from the other day. So, I think when we recorded last week, you were still waiting to catch up on the football scores. I'm actually just hoping to sneak in one more trip to Tottenham Hotspur Stadium before I get on the flight back. Kids have been keeping me busy. So it's the 3F there, football, family, and flights back to Australia. So and you guys have got 3 days of camping. I did see the weather forecast doesn't look amazing. So you'll have to see how you go there, because there's been some pretty heavy rain on the eastern seaboard.
Yeah, that you can sense my apprehension, Pete. I'm not a fair weather camper here at the moment, particularly after our last efforts over New Year's, and we did buy a new tent. And funny story there, to be honest, though, it was a new Coleman tent at Anaconda. Boxing Day sort of sales. We finally got it on a trolley. 2 young kids, 3 and 4 year old in a camping shop, just never going to end well, right? So they're causing a ruckus there. Finally get to the counter with this huge tent. And then my boy says, oh, it comes with kangaroos because there's a little sign on the tent that you can see kangaroos from your tent. So the whole shop was laughing their heads off. So anyway, let's see how I go. Let's see if I survive. But yeah, I mean, let's see also what's our 3 stories this week, Pete. I mean, it is early days. You can see there's not many news stories around in the market. There's definitely a little bit of forecasting happening at this time of year. And I would say that everyone's being a little bit conservative in their forecast, which makes sense given the slowdown in the market around the country and also the highs in some markets. I would say that there's a little bit more optimistic around Melbourne, but there's definitely some more fears that the slowdown in Perth and Adelaide and Sydney and Melbourne haven't got a strong buyer pool, and there's too many listings. That's kind of what the media are saying. But I'm seeing too many interesting articles, Pete. What should we cover this week?
Yeah, well, let's do something different this way. Let's go from the macro to the micro, because I think traveling around a bit the last few weeks, it's been quite noticeable at a macro level, just globally. Pretty much since the US election, there's been a massive sell-off in bond markets. So in plain English, bond yields have been going higher. That's an expectation change, I think, for the trajectory of interest rates. The US unemployment rate surprisingly fell again back to 4.1%. So the US economy just it's just so resilient, it seems. Consumers over there just keep on going. Of course, there's going to be some disruption from wildfires in Los Angeles. But I think, Australia hasn't been immune to this either. Bond yields have been creeping up really since the Trump election victory. And we've had little bits and pieces of data, like the Black Friday figures were out and they were okay. They weren't amazing. I think building approvals figures were, again, okay, but not amazing. So I think that's the macro picture, if you like. So what maybe as we go through the 3 stories this week, we'll try and bring it down to the local level. I've got a few little anecdotes from early open homes this year and a few sort of sales that have gone across the line already. So let's do the 3 stories of the week. So I saw, I guess at this time of year, as you said, there's not much in the way of data coming out, or there hasn't been just yet at the time of recording. But the election cycle is now really coming into focus because we're due for a federal election in Australia, really by May at the latest. So now we're into the new year. The election countdown, sort of the clock starts ticking, I suppose. And I think but the polls have generally drifted away from the incumbent Labor Party. That's not them being Robinson Crusoe there, because almost every government around the world has struggled with that. And I think, it's going to be tight. I suppose that's what the polls are suggesting. And I think this is where a lot of that commentary around interest rates kicks in, because I think when Labor came to power, there was a bit of a gamble, I suppose, that by the next election cycle, interest rates would be back on the way down. And so far, it just hasn't happened. So you see a lot of media articles, particularly some of the sort of left-leaning economists, almost practically begging the Reserve Bank to cut interest rates. Of course, the RBA is supposed to be independent and they won't be kowtowing to that. But yeah, it looks like the election cycle is going to be a massive part of the focus over the next few months. Just out of interest, when we have election cycles, Chris, does that tend to impact people's decision-making when they come to you for a mortgage? Do they sometimes sit on the sidelines and wait for an election result, or does it have less of an impact for people who are, say, buying a home?
Look, it depends on the policies, right? I think going into that 2019 election, there was definitely some people that were, considering selling properties because they thought negative gearing was going to go, or they were potentially looking to wait because they thought negative gearing would go, and then that would make prices fall. And I think, different elections have different policies to help first home buyers, etc. So I think in this one next year, it depends on what they really put out there. And the Liberal Party are basically, saying that people can get access to their super fund, for first home buyers. I mean, that's definitely got to be a bit of a vote winner. Whether it's good for prices, I'd probably say no, but it's definitely going to create more demand. Very similar to when Dominic Perrottet reduced land stamp duty for first home buyers up to 1.5 million. I mean, a lot of the belief was that wouldn't impact prices, but it absolutely did within the space of weeks. price properties that maybe would have sold for 1.2, 1.3 were selling 1.4, 1.5, just because buyers knew they had to get in before that policy may go, which it ended up did. So I think that's the major concern is that if there's some major policies that are going to either help or hinder buyers or sellers, and maybe they want to get ahead of it. But other than that, though, Pete, I think people are so wrapped up in their own lives, and there's just so much pent-up demand in property markets. If we're always waiting for clarity, you would just never get it. And I think buyers have been burnt so many times over the years that I think this is what a lot of people miss in property markets is, someone who tried to upgrade 2 years ago, maybe they've gotten a house and they went into the market with lots of open homes, and then maybe they lost their job, or they got, unconcerned about their prospects at work, or maybe the market ran on them and, maybe they had to spend some of their cash and they lost their deposit, or, they couldn't sell their investment property. There's always a bunch of buyers that are sitting on the sidelines that do need to upgrade and enter the market. And, and when they come back with a bit of venom, because they're like, I don't want to make the same mistake I did last time, and I'm going to make it happen now. So whenever there is a bit of a downturn and uncertainty in markets, there's always buyers, I believe, that want to play against that, a bit of counter-cyclical and go, oh, I missed out. Maybe now's my chance. And hence why when there is forecast of downturns in markets, they just never really happen the way people think they're going to happen. Let more sellers hold off and more buyers enter because they're a bit more opportunistic, and they think maybe now's our time because they've missed out in booms.
I think so. I mean, I suppose on the policy side of things, if you look at the corridors of power in Australia, the Labor Party has run pretty big on supply side measures. So if you think about the construction unions, industry super funds, it's probably not that surprising that Labor has been quite keen on pushing the build to rent side of the housing market. So that sector, I mean, it's a bit nascent in Australia, but it is starting to pick up, especially in Melbourne. I think building approvals, I mean, they're certainly picked up. At one stage, they were running at about 13,000 a month. They're now up to about 15,000. I think Perth and Adelaide are starting to see some more sort of house approvals. But I guess what Labor was really sort of pledging was 1.2 million homes, so 20,000 a month. They were still well short of where things were sort of promised to be. So I assume for the election cycle, Labor will try to sort of promote some more supply side measures for housing. The coalition, as you mentioned, is keener on access for first home buyers to their superannuation to get onto the housing ladder. It's interesting because against a lot of the rhetoric, first home buyer numbers have actually been pretty good over recent years, largely because of some of these subsidies or first home buyer schemes. I think in Victoria in particular, a lot of investors have sold up, and that's sort of been a boost, I suppose, for first home buyer numbers and home ownership rates. I think the one sort of unknown for the election is immigration policy. It'd be interesting to see whether maybe the opposition comes in with some proposed cuts to overseas migration caps, or maybe changes to international student policy. So I think, just on the demand side, immigration, it could be an election hot topic. I think it's certainly a hot button topic in a lot of countries around the world. So it'll be interesting to see how that plays out, because we're only now just a few months out. And I guess normally in Australia, sort of an incoming government gets 2 terms at least. But this time it does look like it could be pretty close.
What's your thoughts before we go on the Aussie election? What's your thoughts with the inauguration next week of Mr. Trump? Do you think this is the fear of what he may do on day one, and how that's going to be inflationary potentially is what's causing bond markets to be, in fear a little bit?
Oh, for sure. Yeah. I mean, Trump has even said, even before the inauguration, he's talked about potentially even increasing the promised tariffs, particularly for China, but also for other countries, so Canada and so on. So markets have generally seen that to be inflationary, but also I think a lot of what Trump is going to be about is deregulating, trying to promote more growth in the US economy. And bond yields have sort of taken a leg higher since the election results. And I think actually just knocking share markets off their highs, I mean, that might just cause a bit of sort of trepidation, I suppose. It might just cause Trump to go a bit slower, because there's nothing like a falling stock market to make people change their mind on policy. So yeah, I think it's largely that, and there's just been I think a general vibe shift. If you look at some of the rhetoric from like Facebook, Mark Zuckerberg and other people, I suppose people have seen the tide turning, I guess, away from some of the progressive governments. Like that's happened in New Zealand, it happened in Canada. The UK government is having a world of bother at the moment. So yeah, I think all of those things are just feeding into this general view of inflation being higher for longer. I think if you look at 1 year inflation expectations, market-based measures in the US, is about 3%. So it's still well above the actual inflation target. And therefore, money market pricing for the US is only now looking for about one interest rate cut in 2025. It wasn't so long ago they were looking for 6. So there's been a big shift, I think, in interest rate expectations. And of course, I think Trump is a big part of that.
Do you think, Pete, though, just your experience over, many years advising, do you think we can get a little bit too, pigeonholed, I guess, blinkered with the way that we're looking at what's happening today and trying to time the perfect time to enter the market when, like maybe the markets have overcorrected here for Trump and, we've got to really prepare ourselves. Interest rates could stay high for longer. Bond markets are freaked out. And then so as the buyer, you say, I'm just going to sit on the hands and wait to see what happens. Then Trump gets in and maybe he can't do exactly what the markets thought he was going to do. And maybe it's not as going to be as inflationary as he thought. And, maybe bond yields start to fall and then interest rate expectations start. So are we in a bit of a danger of getting, wrapped up in short-term media cycles when you're entering the property market? And, as a buyer, there's never really a good time because when sentiment's great, that means usually you got a lot of competition, maybe more listings, but, it's very hard to buy the good stuff because everyone's, hammer and tong and there's a bit of FOMO on the market. When sentiment's pretty poor, well, listings are really tight and, it's hard to get good stuff. And ultimately, you've still got to find the sellers to meet the market, right? And so a lot of sellers don't in those markets. And so what's your thoughts on when you're tracking these stories and what's happening to rates and how buyers should behave?
I think the answer to that question is yes. If you went back to the episode I did over the Christmas break around New Year's time, one of my sort of tips for 2025 was to try and think in decade-long chunks as a property investor or somebody who's looking to make decisions in the housing market. And of course, news these days is very much focused on what's happening day to day. I've been sort of separately to this, I've been researching for a book I'm writing on the history of bonds and bond markets. Not my core expertise by any means, but one of the quotes that stood out to me when I was doing the research is that anybody who thinks they can predict the trajectory of future interest rates is certifiable. Nobody can really predict it. You can look at what markets are predicting, but then something comes out of left field, there's a black swan event, and all of those previous predictions go out the window, and then people make new predictions. So I think, yes, you're absolutely right. And yeah, we do a weekly 2 cent show to look at what's happening in the housing market. But you really need to be, as a home buyer or an investor, you need to be thinking in decade-long cycles. And of course, through that time, there's going to be good news, there's going to be bad news. But that's really why, a lot of what we talk about is the fundamentals of property investing, picking the right locations, land to asset ratio, picking properties with the right fundamentals, because almost by definition, if you're going to invest for 10 or 20 years, you're going to get recessions, you'll get booms, you'll get undersupplied, you'll get oversupplied. So yeah, I think sometimes you can get way too caught up in the daily or weekly news, and you do need to try and, if you can, take a longer term focus.
Yeah, I mean, this kind of leads into our sort of second story, Pete, around sort of exchange rates and the Aussie dollar. It's not tracking too well right now, right, versus the US dollar. What do you reckon this is going to happen to our, is it going to be inflationary for us? Does it mean rates are going to be higher for longer? Like, what's your take when you see the US dollar?
Yeah, so one of the things you'll find if you're somebody who's interested in property and building a portfolio is that if you go through, literally pick any year you like over the past 20 years, and there would always be something that's going to stuff up the property market. It's, if it's 1 year, it might be Ebola. The next year, it's going to be some kind of crisis in the Middle East, and then it's something else and something else. So the current flavour of the month, I guess, is that the Australian dollar has gone from, I guess, the high 60s against the US dollar to about, at the time of recording, about 62 US cents. So it's quite a big fall in a relatively short space of time since October. We talked about one of the drivers for that, and that's just the sheer strength of the US dollar. But also it's an expectation, I think, that interest rates in Australia will ultimately have to come down from their current level. And, why is that an issue? I suppose Australia, in many ways, because we export so much of our stuff to China, we're sort of seen as a proxy currency for what's happening in the Chinese economy. And China's economy has been slowing quite considerably. And I suppose the fear and a lot of the commentary is saying, well, if Australia's dollar falls, therefore the cost of our imports will go up. So if you think about the impact potentially on petrol prices, at the moment, they've been pretty low compared to where they were. But what happens if the lower dollar starts to push up the price of our imports, and then we get a second burst of inflation? So that's what a lot of the commentary is about at the moment. I think just a cautionary note on that. One of the things is that Australia doesn't only trade in US dollars. Of course, it's an important currency, but a lot of our imports would be denominated in the Chinese currency, for example. But also we've got imports from a whole range of other currencies. So if you look on a trade-weighted basis, the impact isn't quite as dramatic. And the reality is, look, the dollar goes up and it goes down, and sometimes the impact might be inflationary, but sometimes it goes the other way. So, yeah, there's a lot of alarmism at the moment, and it's definitely one to watch. But, as I say, there will always be something. If the Aussie dollar goes up, the commentary will move on to something else and then something else.
Yeah, and I mean, I guess it's definitely going to be an interesting one to see where it tracks. But exchange rates, like interest rates, are one of the most difficult things to predict, I would say. And but they have huge impacts in terms of our economy if they stay at certain levels for certain times, and we have to make some major changes. So it's going to be interesting to see how that plays out coming into the election in a few months' time. I mean, it's a very interesting time to actually start to look at listings, Pete. I mean, not so much new listings, but, is a lot of the older stock cleared out of the market and has come off the market? I mean, what are you seeing around the traps when you're buying? Do you reckon there was that Christmas clear out that we usually see, or do you feel like there's still a little bit sitting on the market and more than in previous years?
Yeah, actually, just before we come on to that, just one other point on the currency. I was just over in Boston and actually Los Angeles just a little while back. And the thing you notice when you go overseas is with the Aussie dollar lower, suddenly everything feels really expensive. So even just going out for breakfast, it's like $100, and it's sort of cripplingly expensive when the Aussie dollar is lower versus, say, during the mining boom years when you could almost live like a king when you go overseas. Of course, the flip side to that is a lower Aussie dollar makes our asset prices much cheaper for foreign buyers. So if you're an investor from China or who knows, from Canada or the US, then our asset prices are correspondingly now much cheaper. So there is a lot of, as you said, it's very difficult to predict currency prices or currency levels because a lot of the information is effectively priced in, but also there's these sort of countervailing forces, and as our asset prices get cheaper, it brings in more investment. So strangely, the US brings in people from every country in the world except for one, and that's Australia. On a net basis, more Americans move to Australia, which itself probably says something. To your question on listings, well, I think when we talked last year, one of the points you made is that if you went back to, let's say, 2012 or 2013, it was in the region of, let's say, about 375,000 listings on the market. Last year, we were sort of off the lows. During COVID, we got down to the low 200s, and we were picking up towards 250. But of course, if you went back versus, say, 10 or 12 years ago, still very low levels overall, particularly because the population has increased by 3 or 4 million over that time as well. Yes, in December, most people were probably more focused on their Christmas turkey, but the listings numbers sort of pulled right back as they often do in December. I suppose I'll just throw out one little anecdote for you. Andrew, who I work with, Andrew Freed, he went to an open home in Brisbane, sort of an 800,000 range property. And the first open didn't happen because there were 25 inquiries, multiple offers, and the property sold and was under contract before the first open home. So at this time of year, anyway, there's not many listings. Now, obviously, Brisbane's in a different stage of the cycle from, say, Melbourne. But if you look at the early indicators, it may well be that there's a lot of people still looking for homes to buy and not much supply.
Yeah, and I think that's what we just always need to remember is that, what's going to force prices to fall is when listings increase greater than, new buyers entering the market. And I think if you look at, say, Brisbane, Pete, where you are, I mean, houses are absolutely, pretty much the lowest they've ever been in terms of if you look at total property listings for houses. I mean, 10,000 houses on the market. I mean, often there's usually 15 or, 12 to 15. And then, if you go back 5 years, there was 20 to 25,000 houses on the market. So, you're talking maybe even 40% of what usually is on the market. And so, that is real slim pickings. And if you then take away the quality properties out of that, it'd be a much smaller buyer pool, the ones you'd want to consider, particularly if you start going to certain regions around sort of for Brisbane where it's extremely tight. Obviously, even Sydney, I mean, a lot of people are talking, down in Sydney, the market's been slowing down here. But when you look at houses, 15,000 on the market, it's still, very, very tight listings in terms of the housing market, where there was 20,000 plus in 2018, 2019 when there was a downturn. I as a sort of one tracking the market, it's going to be interesting to see if total property listings just stay really low. It really shows that the turnover rate of properties just getting tighter and tighter every year. And I think that's just something that we need to be watching is how they play out over this year. And if there really is a bit of an autumn boom in listings, or whether they come on earlier and you'll see the media will kick up a storm and say, oh, wow, there's all these listings in February. And we all know that maybe it's just all the agents are front running it because they haven't got enough listings. And then all of a sudden the autumn period dies off in April, May, where there's no more listings to sort of sell. So, yeah, what's your take, Pete?
Yeah, I think, if you look at Brisbane, I mean, Greater Brisbane is a massive area. That incorporates Ipswich, it incorporates Loganshire, Moreton Bay, and then there's sort of the part of Brisbane that you and I would think of as Brisbane, which is, I guess, that sort of 15K from the GPO or thereabouts. But I mean, the thing is, we've seen over the past year or two, you know how tight the market is, because if a new listing comes on that looks half decent, one of our buyer's agents will be at the open home, and you see all the other buyer's agents say, g'day. There's that little stock that even a new listing will see all the sort of the active buyer's agents in the market fighting over the same properties. And when you think of a city with a population of 2.5 million, it's pretty unusual that you're squabbling over the same few good quality houses that come up for sale. So yeah, that's been the dynamic. Chris, I know you're not a big one for predictions and projections, but if you were to guess how, if we were having this conversation the end of 2025, what do you think the housing market will be? And secondly to that, how about for Melbourne? Because I guess that's one of the hot topics at the moment is, will the Melbourne market start to turn around? Will the Darwin market start to turn around? Because those have been the relative laggards, I suppose, over the past couple of years.
Look, it's like you say, Peter, I don't really like to do forecasts. I mean,
that's why I
guess, I think that, borrowing for the lower end of the property market, I think there's still, a lot of demand there. A lot of first home buyers are going to enter the market, particularly if things like, super access is there. And, particularly as rates start to fall, there'll be more and more intergenerational wealth coming down. Parents and grandparents who have done well in property that will also want to giving it to their kids and wanting it to, and I think their return to work is going to be really tight. So more and more people are going to head back to the office. So I think the apartment market and maybe sub 1 million houses in say places like Melbourne and I think Brisbane will do well because I think that a lot of first home buyers will be entering into that market. I think that investors may run out a little bit. I think that a lot of investors who want to invest may have sort of taken charged over the last couple of years, and prices have gone up in a lot of markets where investors are. And so, yeah, I don't see them being as strong as they were in previous years. But maybe I'll be proven wrong there. I think the upgraded market's really hamstrung. I think ultimately a lot of people want to go from, say, the apartment to the house, or, a starter home to a bigger home, but they just haven't got the borrowing capacity to make these jumps, and prices have held or gone up. And so it's really hard. You've had to have had ridiculous increases in income over the last couple of years. And even if people are on high incomes, the cost of living is just, butchering them, whether it's childcare or private schools or just day-to-day living. And so until people get a lot more confidence around the prices of things not going up on them, and their job security there, I just don't think the upgraders market's that strong. Fortunately, though, I think that there's really a lack of listings in the upgrader market, that a lot of people, the homes that people want to upgrade into, they're staying still as well. So there's a freeze up in the market. And so I think, though, that's a market that's underperformed quite a lot over the last couple of years. If you look at it, usually the upper quintile or the upper quartile of the market outperforms the middle and the lower over the longer term, just due to wealth flowing to them, and there's more scarcity and the ripple effect. And so the better streets and better properties and suburbs do increase at a better rate, and better suburbs over the longer term. But I'd say in recent times, it's been more the affordability part of the market. And so I reckon that's going to continue personally, unless we see some real significant cuts, and inflation's really reducing, and there's still really good job security. Then you'll find the borrowing capacity starts to flow through. But, counter-cyclical for that, if you are a buyer that does need to upgrade and you've got the ability to do so, well, then I think this is the market to do it in personally. I mean, most mortgage brokers would say that, obviously, for obvious reasons. But if you think about it, if you can get a good asset right now, and you can do it with very little competition, particularly if it's something like a renovator. I think a client snapped one up just before Christmas up where I am, and that's pretty good buying what they got. You can buy it with less competition. Yeah, there's very low listings, but there's still some, if you're patient enough, some good stuff coming on. And, if you can get a solid offer on the table, maybe they've already purchased and they want a longer settlement or something. You might be able to get a deal done. And rather than, if sentiment flips, rate cuts are happening, borrowing capacities are going up, confidence is increasing. And if that's really a momentum shift in the market, that's a horrible market to upgrade, because a little bit of the catch-up's happening. When people start to enter the market in the upgraded market, particularly if they sell what they've currently got, so they sell their home or they sell their apartments and they put all the money in the bank and then they leverage up again, it's a real horrible market too. And I think you'll find that the prices run really fast. And so I don't think that's 2025 personally, unless there's some really significant cuts. But I could be surprised. I reckon Brisbane's still going to do really well. And Melbourne, look, I would like to say that the confidence will increase down there. I think there'll be a bit of maybe interstate moving back to Melbourne. But I don't think there's really a lack of listings of quality properties down there. And I don't think the investors are going down there yet as well. There's a lot of negative talk about the Victorian government, and the Victorian government have done a lot of anti-investor policies, etc. So investors are a little bit hesitant to go into the Victorian market, but I do feel like they're going to have to look where they can get value for money, given how much Perth and Adelaide and Brisbane has also gone up, and even the regions. And so if they've got the capacity to get a good asset in Melbourne, I think it's good buying, and I think you'll do well. But I just don't know if investors are going to rush back there. But once they do see price growth, then you will find that they jump in, because investors like to follow the herd rather than be early to the party and get the biggest returns.
Yeah, everyone says they're counter-cyclical, but it's often people like to see confirmation that things are going the right way before they jump in. I think it feels like to me that 2025 will be almost like a return to normal type of year, maybe partly for interest rates, but also for other things. I think we've seen such massive disruption over the recent years. But I saw this week JP Morgan's 5-day-a-week office mandate has frustrated employees. So that was reported by Reuters. So that's a big announcement. That's 316,000 workers that JP Morgan has, and they've basically mandated everybody back 5 days. I think that follows on from Tesla, Amazon, DOL. So look, there are some companies like Spotify, for example, is still allowing people to work a hybrid model. So in the office some of the time and working from home some of the time. But it wasn't popular. But Goldman Sachs had already announced this, then JP Morgan has followed suit. So I think maybe that balance of power shifting a bit back towards the employers in 2025. We'll see maybe more people being stuck back into the office more of the time. And maybe things going back a little bit more to how they were in 2019 in a number of different ways. So that'll be an interesting one to track as well.
Yeah, absolutely, Pete. All right. Well, it's a good chat. It's looking forward to next week already, Pete, and hopefully I survive the camping. And happy Sunday for everyone listening. And hopefully you don't get another Tottenham game in, mate. And I look forward to chatting next week.
I'll keep an eye on the weather for you. Yeah, and come and join the chat, Rask Community Forum. So it's community.rask.com.au. If you've got mortgage questions, Chris is away for a few days, but the team can take them at Alcove. And also if you've got property buying questions, Alan Wargent, Property Buyers, always happy to have a chat. So have a cracking weekend, everybody, and look forward to chatting next week.
Chat next week. Thanks, Pete.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.